Welcome everybody to our long verticals and diagonals webcast. This is Connie Hill. I'm happy to be with you here today. Happy to see so many of your friendly names joining us here in our discussion. Today we're going to have a little bit for everybody. Some of you like earnings, some of you don't. Some of you like trading verticals, some of you like the diagonals. We're going to try to have a variety of things on here for you today that hopefully one of them will be just right for you. I hope you're following us on X as coaches. I'm Connie Hill, CS. We've got Barb Armstrong in the chat here today. Glad that she's here. Good friend, fellow coach, very knowledgeable in the topics, and great trader. So as you have questions, go ahead, type them in. I'm going to keep my eye on the chat. Barb will as well, and she might have to catch some things that maybe I can't quite get to, but let us know what your questions are. When you have questions and you're listening to this on the recording, go ahead and put your questions in the comments section in YouTube, because I'll go back and I'll review those throughout the day so that you can get your questions answered as well. Let's go through our disclosures and get down to our full agenda here today. Equity and index options carry a high level of risk and are not suitable for all investors. This is generally true just with any option strategy, okay? With long options, investors may lose 100% of funds invested. We will use the Paper Money software application here. It's intended for educational purposes. I think it's a fantastic tool to use as you're learning different strategies. Do it out on the paper side of things as opposed to your live account. One thing that is important in this class is Paper Money will not assign a short option position early. In a live market, that can happen. That just isn't simulated in Paper Money. So when we are in those circumstances, I'll point them out to you. Past performance is no guarantee of future results. Investing involves risk, including the loss of principal. When we talk about stop orders, many times a trailing stop or conditional orders are triggered, but it'll be filled with a market order, so a price can't always be guaranteed. All right. So talk a little bit today about long verticals and diagonals, maybe the differences between the two. This is a little bit more of an advanced class, so I'm hoping this isn't your first exposure to long verticals or diagonals, but if it is, hang with us. You'll pick up some good things in the course of our discussion here today. When we're talking about options, price, time, and volatility are the biggest contributors to the price of an option, whether it goes up, whether it goes down. And so we'll talk about that. We have several examples to look at here today. All right, let's head over to Thinkorswim. Well, actually, let's not do that. Let's go back here. Just a couple things about trading verticals and diagonals. They're very similar to each other in that we have one long option and one short option. And the short option that we sell helps decrease the amount of our net debit. However, the difference is that they're going to have different expiration dates on the diagonal. On the long vertical, we're just going to use the same expiration period, whatever it is. They're both going to match up. However, in the diagonal, one of the time periods is different. Typically, that's the longer leg in the series. The longer leg goes out further in time, the shorter leg, not as much time. And so it's a little bit different when you're looking at it. Typically, we still are going to need movement out of all of them. At least a little bit of movement, typically in the way that they're constructed. Although if you could construct a long vertical completely in the money, which you wouldn't necessarily need it to be, take some type of movement, but generally speaking, that's what we're looking for in these trades. All right, now let's head over to Paper Money. Looks like the SPX is up. It gapped up this morning. It looks like it's been holding that gap. Looks like we're up here, what, about 0.59%. Blue line is a 10-period moving average. Red line is a 30-period moving average. And your green line here is a 50. Now, we're not really working with really long moving averages because the strategies we're working with more are short to intermediate term. And so that's why it's going to be appropriate to use those types of moving averages. Now let's see what the NASDAQ is, see if it's still holding on to its gain. We had some real heavy hitters announce earnings last night and some decent movement in them here again this morning. So yeah, it looks like the NASDAQ is keeping, it gapped up, it's keeping there. It looks like it's up over 1% right now. Some of the big, let me see if my graph is still sitting here. Let me just cheat for a minute. I'm just gonna just show you some of the stocks that are really helping the market move here today. And that's not it. Never mind. I guess I closed it. I was going to show you something, but I have to go out to my X account to take a look at it. It's a graph that I use where we can see what's going on in the pre-market or post-market, and then seeing where the price of the stock closed. It's sort of on this grid, but not totally. Let me just show you real quick. This first graph is not going to be right. Okay. We're going to put in here. I'm going to put in here CRM. Type it all right here. All right. CRM, you can see right here, you can see that it gapped up, but usually this particular window, we've got set up here on a 1-day, 1-minute window. So we can see the pre-market activity that's going on right here. So last night I took a look at CRM, NVIDIA, and CrowdStrike. All of them were making some good movements in the after hours. They didn't all stay where they were last night. This morning, as the news digested a little bit more, and so all three of these stocks are really, and of course with NVIDIA making a move, really helping the NASDAQ out quite a bit here today. All right. Let's see, I was looking at what Frank was saying here on my standard watch list, items fall off. Is there a way to lock the watch lists? Frank, let's talk about that for a minute, because there are some different, let me just get this back here. Let's go back to our 6-month chart. There are different watch lists that can be dynamic or fixed. So yes, you certainly can have fixed watch lists. So if I come over here to my watch list, stocks we're using in this class come from this liquid options, I was going to say watch list that we created a few weeks ago, and we'll use it for a few weeks and then we'll update it. But if I put my mouse there and I go down and find this liquid options watch list, it's a fixed watch list. Things should not drop off of there. In fact, even if a ticker symbol gets converted to something else, it stays on there until you take it off. Okay. Now these with these little bullet, those little, I guess it's not a bullet, a bullseye, maybe a purple bullseye, that lets us know that list is dynamic, which means it's typically connected to a scan of some sort, whether it's your own or one that's available to the public. And those ones do update all the time. But I'll show you one little thing, and I'm going to just pick an old watch list here. I probably don't need this one from back in February. This is a fixed watch list, but if, for example, I accidentally highlight something like now and type over it with, I'm just going to type in USA, okay? Then that ticker symbol will change because you just overwrote. Okay, so that could happen to some people at some times. Okay, I don't know if that's what's happening to you. Sam says watch list items fall off, pretty confusing. It could be something as simple as that, because I've done that myself many times, right? You just don't realize you've highlighted an icon or a ticker symbol there, and you start typing in, I'll just type in USA again, right? So it can drop off. Okay, let's get back to our tasks at hand. And we're going to show you, we've got one trade going on right now, possibly still. And I'll tell you what's been going on with it. Oh, lovely. IBM was not looking that great earlier today. Actually, I'll show you the chart. This is really nice right now. We're up 680 and 960 of that has come from today's move. So we were definitely down yesterday on this position. Let's look at the chart. Okay, it's a long call vertical. We've got 22 days left. Our short leg here is the 235, so we need the stock to be going beyond 235. Right now it looks like it's at 238, but it hasn't been the case for the majority of the time that we've been in this particular trade. And I'm just going to kind of zoom in here. On this, we were looking at a nice recovery with IBM. They bottomed out here around 200 and the higher peaks, higher troughs. We got in here on this bounce off of what was old resistance and possibly acting as new support, also corresponded with that 10-period moving average. But then since we got in, look how sideways this thing has been. Sideways, 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 just not really doing a whole lot. We were going to be patient with it. And I'll tell you, this morning, I made a change on this. Our initial target on it was 255, which was kind of, we were looking to bounce up into this area, and we gave it a lot of time to give it the opportunity to get up there, okay? And you can see it hasn't even come close. So I changed our target. I changed our stop. I changed our target. I lowered it because I was like, it is not going to get up here. Let's just make something out of this trade and get out. Okay, that was my logic. Let's just change it to something we think the stock can actually get to now. And so I put in a new target. I'll show you this. A new target I put in, I changed to 239. Okay, we're almost there. Okay, I said, if we can get up to 239, 240, we'll be happy. We'll make something and we can get out of the trade. Okay, and then I was like, our stop was clear down here, so I moved our stop to 225.80, which I'm going to put my mouse there. Oops. Okay, it's 225.80 somewhere in here. Okay, maybe just a little bit lower than this red moving average for that 225, and adjusted those because the stop was clear down here at like 216 or something. Okay, what do you think about it now? Are you in a position now that you're like, ooh, maybe we should go back to this old target up here at 255? I don't think so. Okay, I still have the same opinion. CB moved the stop up to 228.82. Good. We're at a point where like we should be in a position to lock in some gains here. Let's not let it get away from us. Okay, so if somebody wanted to get out right now, couldn't fault you for that. But I do think we should move our stop loss up even more. Okay, let's try. We can't make sure because nothing's ever guaranteed, but let's try to lock in that price a little bit closer. All right, so I told you I changed it to 225.80. Right now the stock's at 238. Man, I'm thinking we ought to move that at least to 230. Okay, to try to see if we can narrow that little range there. So let's go do it to 230. You might have a different opinion, which is just fine. You might have other ways you like to treat it, which is just fine. We're going to do a cancel replace. And our conditions here are in the order rules. And so this is where I changed that new target and the new stop to 225.80. And, I could use CB's stop. But I was going to say, I think that's a realistic stop too, is 228. But I'm going to put this at, instead of 230 exactly, let's go 229.80. Okay, just go a little bit below that. Sometimes things come down to even prices, and you've got these automated orders that are set to go. And so sometimes it might bounce at one of those even numbers. So we'll just go a little bit under that. And maybe as we're sitting here today, maybe it goes up and hits that new target that we have in mind that right now is about $1 away. We'll see. Might happen, might not. All right, let's do this. Larry wants to know, is IBM a candidate for an iron condor trade? Before we get out of here, I would say stocks that are going sideways, like IBM is right now. If there's enough liquidity in the options, make sure you're using some that are really liquid. IBM is a pretty liquid stock. But to do a credit spread on the top and on the bottom, absolutely, sideways trending stocks could be good for that. I would even say in our situation here, a diagonal trade might even be appropriate here because of that sideways action, not looking for a real big move. If we're looking for a bigger move, many times the long vertical is better for that. And maybe sometimes those shorter moves on a diagonal. Okay, excellent. Next up, let's talk about a winner and a loser. Okay, we'll talk about the winner first. Coinbase. We noticed Bitcoin. Coinbase is very much related to what goes on with the Bitcoin. Okay, and Bitcoin has been struggling for a year now. I mean, it has just been downward trending. Coinbase has struggled here as well. These guys are one of the major holders of cryptocurrency trading, right? And so we saw that it broke through the diagonal resistance here. Maybe on this day you weren't so sure that it broke through because it ran up and pulled back a little bit, gapped up the next day, and we got in here. We said we'd be happy if we could get 50% of our spread. We'd be happy campers and get out of there. Well, it did it. It hit it the very next day because we got this other gap up. We weren't in it very long, and it went ahead and triggered our 50%. So did we leave a little money on the table? To some extent, we did, didn't we? Let's bring up here Coinbase. We said we would be happy if we could get out at 50%, which was about 367. It filled us a little bit nicer at 370, right? It's filling us at 367 or better. So did we leave money on the table? We did. But on the other hand, we also made some money here. We made $150 per contract. We have 8 contracts on, that was about $1,200. So kind of for an overnight trade, $1,200, not too shabby, right? Our other trade that didn't go our way, although I'm going to show you the chart first, was Walmart. On Walmart, it had been struggling, right? Kept having bad news, had its earnings. Earnings talked about the weak consumer. Anyway, they dropped, okay? They dropped and broke this significant support area here around 107. And so we thought, yeah, they're likely to continue to go. So we did a long put vertical here, okay? And yep, it came down the next day, started to come back up. Right here should have been a clue to us that the momentum could reverse a little bit, okay? That's looking like a little, what we call a doji cross, and a doji cross is support. Could also be the beginning of a morning star formation with 3 candles, where you have a down candle, you have kind of this candle here. The doji really means that the opening and closing price were just almost identical. And so there's not much of a candle body here, okay? But it can mean potential reversal, can mean a pause in the trend, especially if it's down at support. So yeah, you reverse the next day, and then that's when it hit our stop. So unfortunately, did we have the play right? Yeah, we did. Did we lost money on this trade? We lost $94 a contract. We had 8 contracts there. So in this case, we lost $752. So we made a lot more on our winner, lost less on our loser, which is a nice trend to have for building an account. However, one lesson might be that when you have a vertical, maybe you don't have to be so strict. Maybe you don't have to put in such a strict exit point. Okay, give it some room to wander. We didn't give either of those trades much room to wander. Okay, one worked out for us, the other one didn't. And it looks like Walmart is continuing down here again. So if somebody had seen a fresh new entry and they felt like it was worth getting in, great, they could do that, right? Today might even qualify. I would see maybe where this closes today, but some might look at this and say, man, that kind of looks like maybe like a bear flag, right? We have this drop, we have this sideways flag going on here. Looks like maybe today it's starting to break out of that flag if somebody was looking for some continued bearish momentum on Walmart. All right, any questions on these? Chris says, yeah, I'm still live in my long put vertical on Walmart on your account. You're only down 2%. Yeah, right. It was the right call. Chris, maybe you didn't put on as strict of a stop loss as we did in our example trade. And so for you, yeah, it's working out nice, which is good to see. Yeah, Trader Joe, this is not to make Barb smile or anything, but he's calling it a bear fleeg. I don't even know if that's the right way you say it, fleeg. All right, IBM hit our target. We're out. Okay, went ahead and hit our 239 apparently. Oops, get rid of the drawing tool. Let's go like that. Oh, all right, it ran up, hit our, what's the high here? 239.07, hit our order, we're out. Okay, we made a good profit on that one. We're happy to see that. Okay, let's move on with some new things. I showed you some of the stocks that were just really racing up because of their great earnings reports. So it's really kind of having, I'm going to say, a rollover effect, meaning ones we were talking about were like, okay, NVIDIA. Get on the right side here. Is that going to maybe help semiconductors? Yeah, some of the semiconductors are having some nice move from it. Couple of those types of CRM as a software stock. A lot of software stocks are getting a nice move today. Adobe's not in, we're not in our trade in Adobe in this class. We are in a different class. Adobe, that software related theme, they kind of trade with each other if the numbers are kind of good. If it's encouraging for this software guy, it's encouraging for the other. If it's really encouraging for the semiconductor index, then maybe that kind of has a overflow effect on some of these other types of stocks. So that can be a consideration when you're trying to decide if you want to trade something or not. Okay, Adobe has earnings coming up here pretty soon, so some people might avoid that if it's like within 2 weeks or a week. They might go, maybe not so interested in it. Okay. Oh, I am noticing there is a survey in the chat just now. That's what I get for checking my chat so frequently. We have a survey out there. Now, those of you that are here with us many times know that we'll put a survey out there sometimes. I don't control it. Barb doesn't control it. There's some other powers that be that control it. In any case, for those of you that are listening to this live, we love it if you fill the survey out for us. You give us feedback on the session, things that you can also comment on things you'd like to see, and I like to incorporate those things into future sessions. Okay, so it'll do me a big favor if you'll fill the survey out. You don't have to do it right now. It's 2 questions. You can just fill in the radio button, plop, plop, on a scale of 1 to 10. What are your feelings? Plop, plop. You could be done, or you can use it or you can continue and answer a couple of questions if you'd like. In any case, Barb will post that again. I'll try to remind you as we wrap up today that survey is sitting out there. But what I wanted to get to, I want to pull up here MSTR. This stock is called Strategy. Let's give us a little bit more time here so we can see what's going on. This too is actually a kind of a Bitcoin related type stock. And it really was struggling. Look at this. It was up to 197, and then as Bitcoin struggled and some things in that area, it started to struggle. But it's forming here. I can't remember if I posted on this one or not. I've posted a lot of these lately. Looks like maybe it's a cup and handle formation that's going on here. So this is the left side of the cup. Then it forms this base, right? Your cup has to sit on something fairly steady. So we have this base. And then if it goes past kind of wherever the high point was in this basing pattern, so maybe about that day, then some technicians will say, all right, it's ready to see if we can trade this right side of the cup. It's expected it'll go up here to around that 197 area. So it's a long way away from that right now. Before it actually hits the top edge of the cup, it might form like a little handle. And a little handle might look like what? Might look like a bull flag. Okay. What's the stock doing here today that makes you think, hey, maybe we could take a look at this one? It's making a nice breakout move here. And you can see all the volume that went in as it started to break up here. That's getting a little messy. In any case, yeah, we're looking at maybe something that has a breakout pattern right now. So this one, we're looking to have it make a move. If somebody wanted to, they could structure it so that you're going way out in time and you're shooting for a really long faraway target like 197. Typically in this class, the time frame that we'll structure it is not going to be quite that long, although somebody could if they wanted to. Okay. But we're going to look for maybe a shorter move, more of an intermediate type move. So as we come over here to the trade tab, and let's bring up MSTR. Let's maybe look and see here. Tell you what I had in mind. 20 to 40 days is kind of an ideal time frame for somebody who wants to do a shorter term type vertical. Okay. We've got several options that could fit that bill. We've got September here. We've got some weeklies down here, but these monthlies are really where there's the most liquidity. And so since it's still in this 20 to 40 day time frame, we're going to structure something that's more short term, taking advantage of maybe a little bit of a move. So what we're going to do here, let's see if this still looks like it's going to work okay. Ooh, it's maybe moved enough that we might not want to do that one. Initially, I had thought we might do 132, 135, which actually is now all in the money. It is midway now between 135 and 140. So we're going to change this up. We're going to go 135, 140, tons of open interest. You can see volume here today, lots of activity here. So we're going to just do a $5 wide spread here. I'm going to lock this in so we can just run some numbers here. And let me get my scratch pad up. So we would be willing to risk 223 to make what? 5 minus 223. So that's going to be what, about 277, right? Risk 223 to make 237. Yeah, not too bad. Theoretically, that would be more than 100% gain, wouldn't it? We don't have to go for we don't have to go for the max loss. In fact, it's really hard to get out your max loss. Okay. Chris notes is breaking off of a harami from yesterday. Let's go back here real quick. Yeah, it is. That was a nice little harami here. Here's harami means pregnancy in Japanese. So here's the mother body. Here's the baby body. The baby body has to be completely contained within the body of the mother. And it is many times a reversal signal. So you might have been thinking, oh, maybe it's going to pull back here because of that. But if it's at resistance, but instead it's popping the other direction, making a big move here. All right. In this class, we will allow ourselves to risk up to $2,000 a trade. So I typically we'll put it in a position size for that. So if we can go, use my keyboard, $2,000 divided by 223. How many contracts can we do? Ooh, almost 9. We're going to keep it at 8. Okay, we're always going to position size rounding down rather than rounding up. We don't want to exceed that. Let's see. Last week we said we'd be satisfied if we got 50%. And you can see we could have maybe eked out a little bit more than that. Today, let's use a different number. Today, let's use 65%. Okay, so if we have our 5 minus 223, oh, it's our 277. I think I said 237, 277 times 65%. 0.65 is $1.80. So if we can get $1.80 more contract, we'll be happy. So let's change this to a first triggers OCO. We'll create an opposite order and an opposite order. This first one, we're going to make it be profit target. Okay, so let's see. 180, we're going to add that to 223. That's going to say we will get it out to say around 403. And if you wanted to round up or down, that's fine. I'll put it at 403. That'll be fine. And then we're going to make this good till canceled. Now this one, many times we'll put it in there for a loss. Okay. And last week we were a little tight on it. Okay. That's why our Walmart hit a stop. I think I'm going to change my mind on this. I'm just going to do a first trigger sequential, and I'm going to get rid of this second order. And let's see if we can't get some swift movement out of it, and give it some wiggle room, not putting a stop on there to give it some wiggle room so that it doesn't stop out on us like, say, Walmart did. Okay, but we'll go for the 65% here today. Again, you choose your number. You might want a number higher than that, lower than that, and it could vary trade to trade. So let's go ahead, let's put this in our dynamic diagonals and long verticals bucket. Okay, so that is a long vertical that doesn't have anything to do with earnings. Earnings are out of the way. And let's just see what the price has changed to here, 222. Okay, that should get filled here pretty quick. We're not going to worry about it. All right. Cola says the IV is about 85%. Let's go back to the trade tab here. So the one that we're working in is about 85%. Is it advisable to buy a call on MSTR instead of selling puts? In our class, we just do two different strategies only. We do long verticals, which can be bearish or bullish, and we can do diagonals, which can be bearish or bullish. Okay, so I like your thought. You're saying because this implied volatility is so high, would that not favor a selling strategy? And I would say typically that's going to be yes, you want to be selling something in there. And so in our case, we're selling that short leg, right? We're selling it. That is making us have a nice decrease in the price of it, right? 1185 is if we were buying the call outright, it would be 1185. Instead, we bring in this credit of the 965. Going back to your question there about, shouldn't we do a credit spread on it? If you have rules like that that helped you decide what strategy, then absolutely follow it. But I don't think you have to think that it's not that high implied volatility wouldn't help this position, because it's going to, right? This short leg, that is definitely going to help it. All right. I'm a little annoyed it hasn't filled on us yet. So, well, it's down to 220. Let's do this. Let's put this in at 225. Maybe it wants a 5-cent increment. I bet it'll fill for us now. All right. Next up, we've got this. This one we're going to work through pretty quickly. Workday. Workday has earnings. When does it have it? Tonight. They're going to announce tonight. Let's look at a little longer trend here on Workday. All right, there we got filled up finally. Kind of a similar pattern. Some of these softwares got really beaten up, pushed back. Is it forming another big cup and handle? Yeah, well, the handle's really not there. But yeah, this and the top of the cup is up here at almost $250, $249. Okay. So this formation is well underway. It looks like maybe the price is starting to build this side of the cup. Now, it's not guaranteed that it has to go up, right? Even though that's the pattern we're looking for overall, but it could stagger just like this left side of the cup. It was a jagged, lots of flags, right? Flag pull, flag consolidation, flag pull, consolidation. And it could do the same thing here. It's not like it's that it has to march up. It could drop down on us. If it had bad news here, it could drop down on us. Okay. But we're going to actually do a play of speculation today. We don't usually do those in this class. But given the idea that some of the softwares have been coming through well, the fact of what it's forming technically here on the chart, it's been staying above this 10-period moving average for quite a while. So we're going to go with a bullish speculation here. Do we know what's going to happen? No, we all got to find out together when they announce earnings, but we're going to look for a little bit of a move here. Now I am going to put on our studies. Actually, let's do it this way. I'm going to put on what's called the market maker move. It's a little script that shows on the chart. And the script is telling what the market makers have priced into the options. Okay. It's called this market maker move. In this case, it's pricing in, and this is a little bit hard to see with this light blue background and the orange here, but it's 1452. It's predicting a trade 1452 up, 1452 down. It's not putting in a bias. It's simply saying it could go up or down. And that's about 7.36%. That is the implied volatility priced into these options for the move. It's not until expiration day, it's for the move. Now, tomorrow happens to be options expiration day, okay? But the move is likely to take place tonight or in the morning, okay? All right, so in this case, we're going to be speculative, and let's bring up Workday. We don't need 40 strikes. Let's just take this down to 15 here. We're going to do the same thing here where we are going to look for a move. I'm looking for not as big of a move. The market maker move is right here. For those of you maybe not as familiar with it, it shows up right here in this plus or minus 14.47. And this little icon here, I think it looks like dumbbells, but it's an MM over 1M. There's two M's and a little M. That's the market maker move. They didn't ask me to design the graphic on. I probably would have chosen something different. In any case, somebody could be real aggressive and just trade these August options that expire tomorrow, but we're not going to be that speculative, okay? We're going to go out to the September 18s. We're just going to look for a move, okay? We're going to do the 195, 200 long call vertical here. Oops, get rid of that. Right mouse click, buy. I don't want the next strikeout because there's hardly any open interest in there in that 250-cent increment. We want this one. We want the even 200 here. Notice on this, like on the verticals, both have the same expiration period. Now, in this case, we're going to risk 240 to make 260. And if we go and look and see where is 200 on the chart here, 200 is about where my mouse is. In fact, my mouse is a little over 200. So are we asking the stock to do a lot? We're not. We're asking it to make a small move for us. And even if it were to, at earnings, drop down a little bit, maybe it started going down this way, I think going out 3 weeks, we still have the possibility that it could recover, running back up over 200. Somebody wanted to be real aggressive, they might sell the 210. We're not going to be that aggressive. All right, in this case, I think we're going to be able to do A contracts as well. And let's do a first trigger sequential. Let's put in an order that if it makes a pop for earnings, that gets us out. I don't want something on the downside because I want to give it a little bit of liberty to move around because of the earnings announcement and kind of see where it is, see if we just need to close out the trade. Okay, again, it's speculation. And let's go again with our 65%. So 260 times 0.65 is $1.69. Let's just add a penny to that, make it $1.70 to 240. And this says go buy it back at 410. Okay, that's what we're going to do. Well, we're going to buy it back at 410. If it goes there, great. That's what we want it to do. Make that good till canceled. We'll see. Could be a trade that we're looking at next week when we come back. It could be that we're out. My hope is that we're out, but we'll see. All right, it could go completely the opposite way and we have to trade it out for a loss, but we've position sized. We're not going to risk more than $2,000. There's our max loss, 1920 here. All right, let's go ahead. Let's send this off. I wanted to do, are the spreads too wide? There's a question here from Adam. They are a little wide. This a second ago was 1190 by 1290, which was $1. And if we take $1 divided by, you take that spread $1 by, it was 1290. So I'm going to go back to the 1290. It's about 7%. So many people don't like to go above 10%. Many people, you want it, yeah, as low as possible. Because it's got earnings coming out, because there's an expected big move, the spreads are going to be a little bit more. So we need to expect that. But look at the liquidity here. Yeah, there's plenty of liquidity in the contracts that we're dealing with. So from that aspect, maybe not as big of a deal. Now this trade, we're going to go through pretty quick. Okay, so there was one of everything. We are now going to do a diagonal. All right. What I'm looking for here, let's see this. Let me show you the stock we're looking at here. Palantir had some great earnings a bit ago. Okay, they gapped up and they kept running. Well, what have they done today? They really are just doing a nice little breakout here, right? If you had maybe say a flag pattern, a pop, 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 this is a kind of an elongated flag. I would probably call it more of a consolidation. In any case, it looks like it's breaking out of it today. It's still pretty early. We've got some decent volume here. So we're going to take it as a breakout move. However, it'll break out and it'll go to these sideways patterns, right? It'll make a big move and then go sideways for a while. So I'm thinking it may move a little bit here, but maybe not a ton. Okay, I'm expecting Workday to move more because they're going through their earnings. So on this, we're just going to we're going to anticipate a small move and we're going to do a diagonal here. Oh, PLTR. This is going to go a little fast, guys. We're going to sell the options that some implied volatility is priced into. We're going to sell tomorrow. We're going to sell the 185 here, and we're going to buy 3 weeks out the 190. Okay, so 190 is going to be a little further out of money, but we're going to go choose a different month. Okay, so we're going to say buy diagonal. It doesn't know how far we want to go out. It just goes and picks the next month, and we're going to go out to, actually, we can use the 18th here. Let's use the 18th. It's going to be about a $5 wide spread. I was going to spend some time on this on the Analyze tab, which we're not going to do. Okay, but if you wanted to, you could do that yourself. My expectation is that hopefully we'll collect most of this premium tomorrow. And then tomorrow, hopefully I'm going to sell another call against it. We'll, instead of looking clear out here, would maybe go out here to the September 4th. Okay. That's what the game plan is on that. I'm just about out of my time here, so I need to wrap up. So let's summarize. The MMM script, I will put it in our show notes. Okay. To include that there, so that you can see it. So regardless of whether you're watching live or in the recording, go look for it in the show notes. Okay. We had IBM hit our target today. That was nice. We saw that in action. We put on 2 long call verticals looking for a bit of a move. One of them's an earnings play, one of them isn't. And then we got a non-earnings play diagonal here on PLTR. And we're just going to do one contract here. We'll go ahead and we'll send it in. So we're going to track these. Some of them we might be out of, some of them maybe not. Okay, we will see. Now, I do want to make sure that you know what you have to gain by being a subscriber. If you click on that blue YouTube looking logo down in the bottom right-hand corner. You can subscribe to our Trader Talks channel. Helps you find our content so much easier, right? Here's our class right now. Investing in dividend stocks is going to be up next at the top of the hour, and then you can see the rest of the day. Okay, you can see our playlist if you want to go back and check out a previous class where maybe we focused on a strategy that you're interested in. Yeah, go to our playlist. It just makes it easy to find our content. Now, I will remind you again that there's a survey out in the chat, and we really do appreciate it when you take the time to fill out the survey. I will read everything you write. Scott, our manager, reads everything, and lots of other people read everything as well. Okay, we're interested in your comments. Some of you are having a problem adding that MMM to the chart. I don't know if Barb shared that link with you. No, Barb didn't. I'll put it in the show notes. Okay, guys. Thank you for being here. Thank you for your engagement here. If any of these trades you want to practice along with me, do it in your paper money account. That'll give you the opportunity to hit, to follow it along. And then during the week, you'll have questions about it. Then bring those questions to our session so that we can answer them. Okay. Or feel free to put in a comment. I'll answer those as well. All right. Here's our quick break. And again, Cameron will be up at the top of the hour with investing in dividend stocks. Thank you, Barb, for your help out here today. Bye-bye.